the code. I wanted to know, did you receive, I think there was a sort of link or survey, the survey for, you need to fill in the survey for this course. There was a link, I think, that was sent, so that should be finalized. And now I give you also another QR code if I find, because there is another thing that you can do until June essentially, and it is for general appreciation of teaching, but not this course, in general. So that is another thing. Yes, it's true. So before we go into the lecture, I think we need to look at the assessment. So basically, if you go under announcement, you find the essay question. So, as you can see, you need to submit the essay question on the 14th of May. And here is written, you need to answer 2 out of 5. So you find 5 questions, and you need only to answer 2. The number of words is 4,000. So, I don't know, this then is up to you. You can divide 2,000, 2,000. or you can do maybe 3000, 1000. I mean, it depends on you. There is not a rule in this, it's up to you. The main point is that you need to select knowledge. So in reality, because you have to answer 2 questions, you need to be very specific on what you answer and follow actually the question, the actual question. If there is any problem in submission, there you cannot email us because we cannot do nothing. So if there is a problem that you need to upload on Turnitin your essay, and there is an IT glitch, there is a problem, you need to contact the IT office or the people in the third floor. I mean, it depends on you, but that is the only thing that you need to do, because maybe they can address the issue. Always make sure maybe to take a picture. So for example, if you are uploading and it is very close to the deadline, and maybe it's a problem of the system, take a picture, because otherwise you don't have any proof, essentially. This not only for this course, for every course. So the first question, now I mean, we will comment all the questions so that in this way you already know. I think, I mean, you had a look to the questions. What do you think? I don't know, anyone is attempting question number 1? No one? Essentially, it is about investor protection, that is the central objectives of securities regulation. Critically evaluate the statement with reference to the role of financial intermediation and broader policy objectives of securities regulation. So in reality, this is very theoretical essay. In some way, we said many times, and you can also provide examples here, that investor protection is something that we see more in Europe, and so in the UK and Europe, European Union, while the US is focused on. There is also the objective of investor protection in the US, but the Securities Act 1933 is what is the main objective of that act?
Process of listing?
Yes, the process of listing. So in reality it's another vision. It's more on the securities that I'm going to offer on the market. So already you see this question, it gives you some critical remarks. So in reality it is true, you will say in the essay that investor protection is key to securities regulation, but this investor protection was something always present, for example, in the European Union, in the UK, different stories, the US, that started more from another perspective, the perspective of regulating the securities that they were first offered on the market, with a focus on primary market, with a focus on initial public offering. So every time in the US we need to see who is the issuer, we need a prospectus, the gatekeeper of financial markets, that is the investment bank. So those are the things that you need to evaluate, because then it's written, you need to evaluate the statement with reference to the role of financial intermediation. The financial intermediation in this case is investment banking. Is the role of the underwriter, is the financial intermediary. Then, if you want, there is room also to speak about the role of the regulator, the role of the issuer. The difficulty here is that, I mean, if you start to speak about all the actors of an IPO, it's too broad, because in reality here is more focused on investor protection. So in reality you need then to speak about maybe the quality of investors, sophisticated investors, retail investors, what is the difference, the prospectus as the document that is going maybe to protect the interest, of course, of retail investors, the majority of them. Because if, for example, there are only professional investors, qualified investors, we don't need a prospectus sometimes, if that is an offer only reserved to qualified investors. So it's between theory and practice. You need to put some practical points, you need to put some theoretical points. In the theoretical points, then, of course, in investor protection, we said about the European Union, the focus of securities regulation on investor protection, how also maybe to guarantee such supervision of securities regulation in the EU, this is not simple because there is the ESMA, but ESMA in reality is giving a fragmented supervisory environment, where then there are the national authorities that they still supervise their own financial markets. And the direct supervision of ESMA is limited only to trading repositories and rating agencies. So in reality, these things, they can go there, essentially. Any question on this? Yeah.
So we should talk about ESMA here?
You could, because in reality, once you then speak about investor protection, you can compare and contrast how is the US, that is more unified model with the Securities and Exchange Commission, and then Europe with the ESMA is more fragmented in terms of supervision. So that can be a good comparison in order to evaluate the policy objectives of securities regulation, in order to evaluate how these two different supervisors, in reality they operate in their own different jurisdictions. Makes sense? Then compare and critically assess the roles of the Financial Conduct Authority in the UK and the European Securities and Markets Authority ESMA in the EU in promoting market integrity and investor protection. In fact, as you can see, in the question number 1, you can speak about ESMA and maybe Securities and Exchange Commission, but not too broad, because the second is really on that. So the second is really on this kind of divide between the UK with the Financial Conduct Authority and then ESMA in Europe. One is unified model, the other is a fragmented model, and how they can promote market integrity and investor protection. So even here, in reality, you need to speak about things related to the objectives of securities regulation. Now, if you answer question 1 and 2, there might be overlap. So in reality, maybe simpler, but maybe it's more difficult because you need to select the knowledge in a very specific way to address the question, essentially. But you can do. You can even, it's like working one time for both. You can even do, but you need then to select the right knowledge in the right box. Because it's very easy then to have the temptation to have overlaps, and that is against you. Because then it means that is too broad, too generic, too descriptive. So the first two questions in reality are simple to one end, but also difficult, because if you describe too much, it's very descriptive, you achieve a merit. Here is more about critical analysis, so you need to bring further points in the discussion. These further points, usually they come with the comparative law analysis. So I see how is in the US, the focus in the US in question 1, the focus of the EU and UK in question 1, that is different focus, one investor protection, the other more primary market, so it's different. And question 2, actually, I mean, you can describe, you have possibility to describe also, not in isolation, the Financial Conduct Authority, but as a Twin Peaks model with the Prudential Regulation Authority within the Bank of England. So one is prudential supervision, one is conduct of business, and supervision of securities. So this you need to outline what is the Twin Peaks model. And then you need to outline what is ESMA, for example. And to say, for example, once you say that there is fragmentation in ESMA, in supervision, in Europe, you might say that this fragmentation is less common in banking, because within the banking union, we said there is the European Central Bank at the top that is going to have direct supervision of significant banks within the member states. Any question you have on this? Then, I mean, these 4,000 words, there is a 10% leeway. So in reality, you can write 10% more, 10% less. It's up to you. You are not obliged. Yeah.
I know it says footers on the line. Do they contribute to the word count or does it include them?
What contributes to the work?
Footnotes.
Now the footnotes, I think in your white book, I think is written that they don't count. I think it's written there, but you need always, or it counts. Okay, so it is. If it is written that count. Everything that is in the white book is what matters. So if it is written in the white book that they count, essentially. One point that I want to say is this, that me and Douglas, we will never count the words or look at the report of Turnitin, how many words, but we will see if, for example, it is written 10,000, we need to penalize. In reality, we don't penalize you because we always give the mark that you deserve. Who is going to penalize you is the administrative office because they see 10,000. So I mean, if you are reasonable, it's possible to write something in between. I mean, for example, 4,500 words is not the end of the world, it's fine, there's no problem. Even 5,000 words is not a big drama. But of course, if you start to do more, like 6,000, 7,000, this is impossible now, cannot be done, essentially. Otherwise, it's unfair for others, essentially. So, the main point here is to understand the question and then structure the essay. Before I comment the others, I tell you also how to structure the essay. So the main point is to divide the essay in different sections. The sections are numbered, so you put 1 point introduction, 2 point the role of the Financial Conduct Authority, 3 point the role of ESMA, 4 point conclusions. So this is a good structure because we can see that there are different sections. We can see how you think, why you want to speak before about, I don't know, policy objective, and then you want to speak about the regulators. I don't know. It depends on you. The name of the sections, you decide, you invent the name of the sections. You are not obliged to follow this model. If you follow this model, it's simpler. Why is simpler? Because once I have different boxes, first of all, this model is forcing you to be selective. And then it's forcing you to put the right knowledge in the right boxes. So if a box is titled Financial Conduct Authority, you will not insert things about the ESMA. This is the idea. So in this way, even for time management, because you have time at home, you can try to do those kind of exercises where in reality on Monday you write 2 sections, on Tuesday other 2, and then Wednesday another, and the essay is completed. Then you start to cut, to adjust, to make it better, and so on. So I mean, it's not very difficult if you do in this way. You can also divide. Any question on, yeah? No, in reality, I mean, the role of the FCA I would put within the paragraph titled the role of the Financial Conduct Authority. But then maybe in the conclusion is where you need to be original. So you need to say whether maybe these 2 models, they are similar, identical, they are different, why, and this difference, what is implying within securities regulation. Less protection in Europe, more protection in the UK. I don't know. A conclusion that is the result of your research, essentially, but should be original. So it's always original because essentially, I mean, you research and then you conclude. So we don't want, like, I don't know, big ideas. We don't need this. We need just this structure, and then a conclusion that can even be opened, like one is more flexible, the other more static, and then you can put your own idea. why it is like this. If there is a solution, maybe you can say that a solution to avoid fragmentation in Europe is to give more direct supervision of securities regulation to ESMA. But on the other hand, this will go against the Meroni doctrine. So this is critical analysis. So essentially, I mean, you put a question, you give an answer, possible answer, and you also critically analyze whether that possible answer is possible or not, essentially. And what are the limits, the perspectives. In this way, you will achieve an high mark, essentially. Then, references. Of course, if you have Harvard reference style that is in text citation, that will count towards the final word count. Now we discovered that with the white book also OSCOLA counts towards the final word count. But this, don't put too much thinking on this because it's not important. What is important is the content. The only point is this: you need to select one reference style. Or you follow OSCOLA, or you follow Harvard, or you follow Chicago, whatever you want. But you select one, pick one, and continue and stick with one. Then once we have this idea, and so we have different references and so on, if you use Harvard in text citation, you must have a bibliography. You must have. Because of course we don't know who is this author and what he wrote about. So with Harvard or any other in text citation, bibliography compulsory. With OSCOLA, no, because in reality it's already a full citation in footnote, so we don't need. But if you want, you can. You can even do. The bibliography in any case doesn't count towards the word count. But what is showing is this, because for example, if you write a legal opinion for a client, at the end you will put a bibliography. You need to verify that in reality, I mean, you were working on it. And the same thing is in an essay. It's a piece of work. If you have time, you have time in reality. You should do. It's always better because it can be part of that evaluation that is structure. We evaluate on structure. So if there is a bibliography, if it is divided in sections, if it is in order, well written, this is already distinction for structure. For other things, no, it depends. So we need then to evaluate the content. What does it mean that an essay is descriptive? It is descriptive where, for example, if I see your essay in question number 2, and I find general information about what is the Financial Conduct Authority, what is the ESMA, this is good. I mean, you can do 1-2 lines, but not half page of this, because otherwise I can open a textbook and I read. So in reality, being at home, it's normal that you can have access to this. So that is not a big achievement to just report paraphrasing words into an essay. That is the starting point to introduce the topic. But then you need more. You need critical analysis. So maybe in ESMA you need to discuss the Meroni doctrine, the significance of the Meroni doctrine, the limits of the Meroni doctrine, the exceptions given to the ESMA, like in the case of short selling from the UK, that gave direct supervision of that phenomenon in financial markets to ESMA. So those are the things that we are looking for, not only more complex things, because this is LLM, it's not undergraduate. If it was undergraduate and you are able to describe ESMA and FCA, that is enough. You can even take distinction, undergraduate. Postgraduate, no. Is clear? Then the topic of today, I mean, I don't comment because we do today, but in general it is on SPACs that have emerged as an alternative mechanism for companies to access public capital markets, critically analyze the regulatory challenges posed by SPACs, and evaluate how effectively the regulatory frameworks in the UK, the EU, and the United States address investor protection and market integrity concerns. This is something now we see with the lecture. But even here you will find, of course, a definition of SPAC, what is a SPAC, So you need to give a little bit of context before you comment on the regulatory frameworks in the UK, in the EU, and the United States. Then, question 4, evaluate the effectiveness of approaches to market conduct regulation in the UK, the EU, and the United States in assuring market integrity and protecting investors, including in the context of use of technology for compliance, regulatory, and supervisory purposes. RegTech, SupTech. I think Douglas did this. And so, essentially, anything that Douglas was saying on this topic, I was not here, but anything that he said here is all about RegTech, SupTech, the role of technology, how technology can change or maybe not change traditional functions of capital markets. So this is something that, yes, I mean, all these essays are not very simple. They are not very simple because you are dealing with macro areas, macro topics, and then specific subjects sometimes. So for all of them, in any case, that is the structure, the one that we need to follow, the structure that I told you, and then the critical analysis. Because otherwise, if you don't achieve distinction, you will find as a feedback that this essay is lacking critical analysis in relation to, and we say what it is. So usually the problem why you don't achieve distinction, not only here, but also in other modules, is critical analysis. So if you don't use that, you cannot achieve distinction. But you can arrive close, sometimes 70, 67, 68. We don't give in between bands like 69, no, we don't give, because only one mark is 70. So we don't do this. But 67, 68, you might achieve. Doesn't mean that it's bad essay. In fact, I would like to say this because then maybe we arrive in the summer with few of you that maybe you're not complaining, but you don't understand why you missed. This is quite common to miss the distinction, because also there was a director's meeting, and they said we give too many distinctions. This cannot be possible, because otherwise even the role of the UK is going down. So I don't know, it even looks bad that Queen Mary sole distinction, London School of Economics in law, it is 60, 65. It means that we are not serious otherwise. So we need in law a 60, 65, 67, 67, 68 is like a distinction in biology, chemistry, maths, economics. So it's very good, it's very high mark. Of course, if you go back in your own country, they don't understand this, because in our country, like in Italy, in France, if you have the maximum, you are good. If you have below, you didn't study. I mean, this is what we think. But this is our thinking. Here we think in another way. So in reality, every employer in the UK knows that in law, 65 is excellent. Because they know even them, maybe they took, even me, I took 60. So I mean, it's not something, because in the past was like this. In the past there was no distinction. Distinction was 1, 2 in all the class, in all the LLM. While now it's very common, but it should not be common. At my time there are people that have failed the LLM. So I mean, it's different completely. Then became a little bit more soft, but now it's too soft. So in reality, I mean, we are trying to calibrate this essentially. Also because now you have ChatGPT. Now on ChatGPT, in relation to this essay, me and Douglas, we are not against the use of ChatGPT. So maybe you might even use ChatGPT, but you need to use it in a way that is structured, in a way that entails critical engagement with the tool. So one idea, and this will not be within the word count, you can also declare that you used ChatGPT, but you can show us that essentially you used in a critical way. So for example, You can even have a log of activities at the end of the essay about all the prompts that you used in order to have some knowledge from ChatGPT. Then, of course, if you declare that you use ChatGPT, there is an hallucination, so it means that you copy and paste without verifying. That is your fault, because this tool can make hallucinations, and if there is an hallucination, it's your fault, because you need it to double check. So it's up to you. I mean, ChatGPT or whatever is AI is a powerful tool. For honesty, integrity and transparency, it's better to declare it. If you declare it, you don't have minus 10 marks, no. Maybe you take even distinction, because you are showing an extra skill that you know how to use it. At some point you need to use it, I mean, in the sense that now in law offices or whatever, you need to use it. So you can do, but if you do the best way, that is more ethical, is to declare I used ChatGPT, this model, or I used Claude, and then you can write, I will show at the end of the essay an activity, log activity, or a research booklet where I show essentially what was the prompt, and then how I could challenge the answer of ChatGPT. So just documenting what you were doing. So this can show already that you were critically engaged with the tool. You didn't copy and paste or look for an answer like a quiz. Also, these questions, they are AI proofed, because in reality they are broad. They can, I mean, an AI will be confused. They will start to write whatever they think about the topic. So still you need to select. Now, if you are an expert of the topic, you can, because you can say to the machine what to look for, which specific thing or critical engagement you want, and they will give you even better ideas than a human being. But if you don't know how to use the prompt, or you don't know the subject, it's quite impossible. You just usually copy and paste this and give to the tool, but this cannot be done, essentially. Is clear? Any question on this? And then, to what extent do existing securities regulatory frameworks address digital assets in the context of the objectives of securities regulation? Critically analyze the regulatory approaches adopted in the EU, the UK, the United States. Digital assets, I mean, this is also something that I think Douglas was speaking to you. I don't know what he spoke about, but here you need the definition of digital assets. What is a digital asset? And then this is a broad terminology where we can find many other types of digital assets, including stablecoin, non-fungible tokens, unbaked cryptocurrencies, crypto assets. So crypto assets, it is a specification of digital assets. They are all digital assets. Even CBDCs are digital assets. Then within that there are digital money. So I mean, this is quite theoretical. I mean, there are things that it's not so simple question. And the approach is that in the UK, for example, a digital asset is a stored object. It is a form of property in the UK. There was a reform in this country, a new law in this country. In the EU, no, this is quite still, I mean, not very specified. And also each member state has different property laws. So there is fragmentation of the notion of digital assets. And then United States, so that sometimes, I mean, yes, they go towards the idea of securities regulation if that token represents a security. So, I mean, all this essay, it is playing on the definition of digital assets as a representation of value or claim against maybe the issuer of the digital asset. And there you can find a lot of things. You can find, I don't know, a lot of ideas, and also critical engagement, because it's very about critical analysis. Make sense? So the last two are more Douglas style, let's say, the things that he was telling you always. The others is more on my teaching essentially. You can do a mix, yes.
How the answer will be assessed? You said that the first three are made by more on your style, while the others two are
No, this
Douglas
doesn't
style.
change anything.
Doesn't. Okay.
You can even take two Douglas, one me, one Douglas. I mean,
But for example, the last two questions will be assessed by
No,
Professor
no.
Arner or a...
no, essentially we do together.
Okay.
We always do together. So I will look first all the essay, then he will look all the essay, and then we give the mark. Like in M&A or in corporate finance, that we are 4 lecturers, we do all together. Then, of course, in that case of corporate finance, because Kokkor is an economist, maybe net present value, I give a first mark idea, but then he will give the final green light. He's an economist. Only in this way. But here we are both lawyers, me and Douglas, it's the same. We just mark all together, all the essays together. And then we decide, we agree for each one, 65, 70, and so on. So you need to answer 2 questions. If you answer 3, we read the first 2. The third one is 0, essentially. Any other question? Maybe also don't write this in 2 separate file Word. Are 2 essay questions in the same file Word. And always remember, right, question number 1, question number 4. Give us this possibility to identify directly. I mean, they are, because question number 1 and 2 are quite similar. So in reality, then it's against you, because we don't understand which one you wanted to answer, and that makes a difference. So don't forget this. This is maybe the most important. Question 1, question 3, which question I want to answer. And then submit, and then if you use ChatGPT, you can declare, and you can have an activity log. That is better because you have more chances. You can show that you use it, you are ethical, transparent, and in addition you also show the critical engagement that you did with the tool. Sometimes can even go better for you, because essentially you show an extra ability, an extra skill. All these kind of essays then you can match with current knowledge. If there is something in the Financial Times that is speaking about something related to the topic, and this something is relevant, you should mention Financial Times, Bloomberg, Wall Street Journal, whatever can be about financial news. It's important in this essay, because can show that you know how to apply the knowledge to the facts, to the current facts of the world, even with whatever is happening in the war of the Gulf, even there, how the value of securities is fluctuating, for example, who is taking advantage of the market, who are short sellers, why for market integrity we should avoid short selling. This could be also something very actual. This is also about your creativity. You can even start one of these essays with the actual news of today, the case of short selling or a long position in oil derivatives contract, and how in reality this is challenging the notion of market integrity, investor protection. This is very original. I mean, it's up to you. If you are creative, and if what you select from Financial Times has a meaning within the essay, you can, yes, you can even take 80, 85, because that is creativity. Not everyone can do this. So if you want this 80, 85, that is the road to attach knowledge in some way with current news, financial news. Any question? Any question you have? Yeah.
So even we do like Oscar football, it is included in what count, right?
Yes, this is what we said, because seems that in the white book, that is your book, is written that they count towards the word count. But I mean, at the end of the day, it's not a big problem, as I said. Even if we find a very good essay, and this essay, I mean, these two essays are written within 5,000, we will give you the distinction because it's good. If it is good, it's good. But if it is 6,000, 7,000, 8,000, 9,000, no. We still give you the distinction. Then you might risk that, of course, the people in the third floor, they will do a deduction, a penalty. They will apply a penalty. So once then you upload on Turnitin, make sure that you avoid plagiarism. This is another thing. So because in reality every one of you has received, I think, a student survey, one of the questions was whether we were clear on the assessment. I think we are very clear because we spoke about each question, the structure, the plagiarism, we spoke now. So in reality, once you upload on Turnitin, that is under check verification for plagiarism. If there is plagiarism, that is a problem, because plagiarism essentially is not permitted, and it happens when you cite the work of someone else without citing the main author, and so that cannot be done. Even if you like a quote or something that you find in a textbook that you need to copy and paste, you can copy and paste, but you put in quotes and then you put the reference. In this way, it's not plagiarism. Is clear?
So you said we can use the muscular references.
Yes.
So that's essential. So why does the instruction say we shouldn't use the head of the article?
What is written?
The second-
Footnoting is not required in the...
No, the second one.
This, do not include your name. The second one.
Yeah.
Header or footer layout. So I think they mean that once you have Word, you can insert a footer, you can insert something at the top. I don't know, if you do a double click on the Word file, I think that is called a footer header. So in reality, that you don't need to use it as a function. Basically, it's something that no one is doing. Like, I don't know, I can show you here. Let's see. Yes, you see, header. I don't need to write here in this. See? Here, I don't need to write here. I need to write here, from here. This is what all it is. Because maybe in the footer header I could write Daniele Dalvia, but I cannot identify myself because this is an essay that is anonymous. I can write the student number, but I mean, what I told you is enough. I mean, don't overthink about those things. It's fine. It's not at the end of the world that if you put your name is a problem. Yes, I mean, could be a problem, but in my life I found students that they put name and surname, we still marked. I mean, there's nothing that we can do. Then what happens is that then there is another layer of protection that are the people of the third floor. They will watch each essay. If there is a student that identifies himself, he used a footer, they are the one that they start to say, here is -2. But they are not, we don't do. We just mark what we see in the content. Any other questions? Yes, I think we said everything. I don't think we have other things to discuss. Plagiarism we said. The essay titles we said. I think we said everything. Then I mean, if in the next days, this is another point, we cannot answer by email that maybe you ask us what I should include, because we spoke now. So reality, and then it's by email, we cannot do this. We cannot give you the green light. This is the structure that I was thinking. Are these sections right, professor? This cannot be done, because otherwise it's unfair.
In case somebody's interested in doing questions 1 and 2, and since they're connected in some way, can they just develop one essay responding to both questions?
In reality, no, it's better not, because otherwise it's very confusing.
Okay.
No, it's always better to divide, because we must mark 2 different essays. So we need 2 different answers. Although they are quite interconnected, but we need to see in different way, because then in the feedback we need to see, to write question 1, this is the feedback, question 2, this is the feedback. Otherwise it's confusing, yes. Any other question? No? And so we can look the lecture of today, essentially. So this is the last lecture, essentially, on another special topic. The special topic, this time, you have seen already, I think, digital assets, fintech, decentralized finance, all these different topics, but also with me, the role of rating agencies. For example, we did the role of supervision within the UK and the European Union and the US, and the definition of securities. This time is the time to study securities regulation in relation to special purpose acquisition companies. So it is called the SPAC. SPAC is an acronym. It's an acronym for Special Purpose Acquisition Company. What is a SPAC? I don't know how many of you has ever heard about SPACs.
How many?
I mean, yeah, you heard about SPACs? Anyone else? Yes.
It's a vehicle used to acquire a private company to go public after that.
Yes, it's a vehicle. So in reality, if you look at the name Special Purpose Acquisition Company, they are companies at the end of the day, so they are not something else different from a company. They are companies. Which type of companies they are? Private companies or public companies? Public. Yes, public. They born as a private company, so usually the main phenomenon was in the US. So in the US, those were companies, private companies, that they incorporated under Delaware state. It's one of the states of the US, but very famous for the incorporation of companies, because actually there are judges that they are pro-companies. So in reality, many companies they incorporate there because they always know if there is a litigation, securities litigation is very common in the US. If your company is incorporated in Delaware, you will litigate in Delaware, not in New York. Although maybe you are listed in New York, but we follow the incorporation of the company. So every company borns always as a private company, even SPACs. They are private companies at the start. But then they have a purpose. Their purpose is to list immediately. So we go in Delaware, we incorporate the company, we call it a SPAC, and we gave a name, like, I don't know, Diamond Eagle Acquisition Corporation. There are many of those names that you can check. It's just a name, the name of a company. Then you want immediately to list the company that is private today, you want tomorrow public on financial markets. Usually the New York Stock Exchange or Nasdaq. One of these two are the 2 New York exchanges. We studied also together, essentially. So they are physical exchanges. At that moment in time, they become public companies because they are listed on capital markets. And then, as you were saying, they follow a special purpose. The special purpose is to find a target company and to acquire the company. So So if they acquire the company, the private company of today becomes the new public company of tomorrow. So in reality, it's a way to facilitate the listing of private companies. Why? What is the main idea? The main idea is that if I am a private company, usually I am a startup, then little by little I become bigger, 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 and bigger. But to do this, I need money. So sometimes can be my father, my uncle that are giving me money, are called angel investors. Other times can be venture capitalists. So there are people that they really believe in you, in your ideas. They know that you are a good inventor, but they know that you don't have money. You need money to build up your business plan. So in this way they finance your company. And that are round of financing of venture capitalists. So in reality you have these different rounds of financing. Then from a startup you become bigger and bigger. And at some point, like Facebook, you want to go public. So usually, and we said together, if you remember at the start, the normal traditional way to go public is IPO, initial public offering. So that is still today is called a traditional IPO. Traditional because what we need to do the things that we studied together. So essentially you go to the investment bank is applying a very high fee in order to get you listed, then they write a memorandum of understanding, they check your business plan, they run all the meetings with investors in order to market your new securities on the market, and then at some point in time you will get listed, but you need also the approval of the regulator. So can be very long, can be very costly, and is very uncertain, because sometimes if we think even in 2020, 2021, the case of Ant wanted to get listed in China, but then didn't, because the Chinese regulator changed mind. So they waited more than 1 year to then stop the listing. So that is the challenge, that not everyone can get listed on public markets, especially if you are a startup but you are not very well known, and to be well known past maybe 5 years, 10 years, you need also a very consistent history of accountants, of historical balance sheets, and not everyone can do this. So essentially it's very difficult to get listed. It's also very difficult because there is a gatekeeper of financial markets, that is the underwriter. So if there is an underwriter in between the company that is private today and the public market of tomorrow, the underwriter is the gatekeeper. If they don't give you the green light and they don't accept you as a client, you will never get listed. So sometimes to knock to the door of JP Morgan, or you are already a client and so it's simpler, or you have a referral and so it's simpler, or if you are completely new, they start to check and do a very good due diligence on who you are. You can even claim that you're a billionaire. They don't believe you. I mean, they might see this on the newspaper, but then they need to see in actual money what is your portfolio, how many shares you have in your portfolio, bonds, whatever can be, derivatives, real estate, and they need to check that it's real. If you have luxury flats in Dubai, they will fly to Dubai and they check that it's real, because otherwise they don't believe you. If you are a client, no, they believe you already. If you are with a referral, they believe you already. So in reality, it's very close world. For this reason, not everyone can get listed. So now there is this innovation that is the SPAC. The SPAC is a financial innovation. So with a SPAC, you can get listed in a different way. The final result is the same. You get listed. But how you do this is different. So it's the procedure, how you do. In the traditional IPO, there is a private company that does all the steps from startup, financing, round of financing of venture capitalists, and then at some point IPO. If they are good, they are public. They become a public company. We don't running all the advantages. I mean, if you're a public company, you have a widespread basis of investors around the world. You have more image, prestige, especially if you are listed in New York. So I mean, more liquidity, because there is a lot of liquidity in the market, especially in New York. So that is the idea. But then this is only for one side of the story. I mean, a normal private company that in time will tap public markets. Then there is another side. There is always the private company, but this time they receive an help from another company that is already listed. It's the SPAC. The SPAC is already listed, but the fact of the SPAC is that it's a cash shell company. So once the SPAC is going to get listed, the investment banker is always useful. I mean, it's the same process. Even there is an IPO. It's an IPO, the one of the SPAC. The only fact is that the SPAC is not an operating company. They don't sell books, chocolates or whatever, or provide services. They don't do nothing of this, because they are cash shell company. So in reality, they are vehicles, as you said, that are used in order to raise money on public markets from public investors, and then use that money to buy out a company that is private, a target that is outside of the public market. So the company now outside can benefit from the fact that already we have a vehicle that is listed that can actually give us the possibility to bypass the rules, the traditional rules of IPO. This is the original idea. In fact, SPACs for many years, they were defined as backdoor listings. Rather than entering from the front door, this is the traditional IPO, you go from the back. But you always arrive here. This is the same public market at the end of the day. Makes sense? So for example, let's see if you understood like what can be a problem in this model. Why, for example, a traditional IPO is more regulated and in some way also more safe for public investors, and what is the difference in a SPAC model? Because now I explained to you the two models. What you see that can be a criticality or something that might be dangerous?
Maybe culturally, the company that's being acquired by the SPAC is not ready. Its culture is not ready to be listed in the public market, while a company that's usually listed in IPO goes through a long process and takes a decision, I think, in certain time in advance, which allows them to go building that into culture.
Yes, it is one of the criticality, in fact. The fact that, I mean, if I am private today and then I become public tomorrow, maybe I'm not ready to get public. Can happen. Because there were cases of SPACs that they tried to get listed companies that they were selling, they were promising to sell electric vehicles, electric truck, for example. But at that time, they didn't produce even one electric truck. So based on the financial projections of that company, they could get listed through the SPAC on the market, but then once they were listed, still after 1 year, 0 truck production. This is quite bad, essentially, because this is something that is a disinformation for public investors. So that is a crime. And it's also litigation, class action in the US. So using financial projections is the advantage that private companies they have once they are going to merge or they are going to be acquired by a SPAC. So that is the advantage, because I can use financial projections. In IPO, traditional IPO, I cannot use these financial projections in this way. I might mention some of them in the business case that we draft together with the investment bank. But the investment bank is looking for solid financial historical balance sheet. So they want to see real numbers, not the numbers that you will do in 5 years. Otherwise, they don't get you listed. So there is this kind of already perception that is right. They are more secure. The others, they are less secure because it depends who is this target company that the SPAC is going to target. Is a promising company, zero revenue company, so a startup, or it is already an operating company that was very close maybe to decide the traditional IPO, but because it's cheaper to go to a SPAC, because the SPAC already paid the investment bank, at that point in time maybe it's better to go through a SPAC. So it all depends on the target company business plan and if they are truly ready to get public. For example, when I was even speaking with another person that we were in this moment, I mean, we are a SPAC in New York and we are speaking with people maybe in Estonia. These people in Estonia, in reality, they are private company today, very big private company in Europe that is producing batteries of lithium. And essentially, those people, they are thinking to get listed, but they know that an IPO is too costly. They know also that once you get listed, you lose control of the company, while that company was already maybe set up by the father, grandfather, and him, the guy is only the last generation, is the son, the father died, is the son, is very scared to maybe waste all these years, at least 30, 40 years of work by getting listed, because you lose control once you get listed. And listed companies, they have more scrutiny. I mean, there are many issues there. But Goldman Sachs and then us, we were proposing to him another way to get listed through a SPAC. But him is uncertain, because also another point is this, that him is in Europe and the SPAC is in New York. If he wants to get listed in New York in the US, he needs to convert all its balance sheet in the reference standards of accountancy of the US. And that also has a cost, and also has a time, at least 1 month, 2 months. PricewaterhouseCoopers said at least 1.5 months to reconvert all the balance sheet. But already, that is a good example, is an operating company, that they truly have numbers. It's not a startup. So if the SPAC is going to target this kind of company, more success is likely, because in the end, I mean, it's an operating company. But if it is a true, pure startup, it is challenging, it is risky. You might even not be able to get listed, or even if you get listed, then you might end up in trouble, because what is not catch today can be caught tomorrow. I mean, all clear? Until here? The idea. Then we go in the slide, I mean. So, also, I mean, I put Trump because of the Gulf, but also because in general, I mean, is the one, you remember that at some point he was banned by Facebook, all the social media, and so he set up its own company that is Truth in his media company, that, I mean, you can watch. I mean, he's publishing crazy things today, I mean. But generally saying, this company Truth was a private company that then was acquired by a SPAC, so DWAC. Then they became DWAC, and so in reality is the one that at some point in time, that I think was around 2022, because was at the end of the SPAC boom, but then at the start of the new renaissance of SPACs, he could make this deal, and this deal was profitable for him, profitable for the SPAC, because as you can see, behind there is President Trump in the target company. So it's not a target company like a startup that was set up by a person that we don't know who he is. So that also can change the perspective, essentially. And in this moment in the US, actually, since the end of 2025 and up to 2026 now, SPACs, they came again on the national stage in the US, and they are again today above 2/3 of the total IPO market. So they are big again in some way, they are great again today on Wall Street. And many people, they think because of Trump, because without Trump, in reality, at the time of Biden, there was another chair of the Securities and Exchange Commission. And so that chair at that time was very critical of crypto assets, stablecoin, special purpose acquisition companies, everything that was a financial innovation, and even private equity. Then after Biden, everything changed. So now today the US it is into deregulation, it is into promotion of market innovations, and so one of that is the SPAC. And so at the time of Trump, many other people, they started to list and to get listed through SPACs or to promote and sponsor a SPAC in the US, essentially. So SPACs, as every financial innovation, they go in different kind of stages. Sometimes they gain popularity, then they are less popular, now they are again popular. But generally saying, before 2020, they were not so popular. So when I started my PhD at 2014, there were only 20 SPACs every year in New York that they were listed, so they were not famous. They were more in the dark corner. I wanted, this one. But then in 2020, they listed for the first time, that is the time, in reality, I mean, it happened by chance. When I finished my PhD, it was 2020, they listed 240 SPACs. In 2021, 456 SPACs. 101, this was a bet. No one could imagine that they could become in this way. And so at that time, that is not so long ago, they raised the equivalent, as you can see, of 162 billion in capital only in 2021. Today in 2026 we are 100 and something billion, so we are almost like 2021, today in 2026. So still today in 2026 we have the same slide, which essentially they account for 2/3 of the total US IPO, and the average size of the SPAC, it is a bit smaller. This was the time of 2020, 2021. The time of today, 2025, 2026, is a little bit less than 300 million average. So what does it mean 300 million average? It means that once the SPAC is getting public on the market, they raise money from public investors for a total of 300 million. So it's very common to have today SPACs that they are between 100 million, 300 million. While at the time of this boom and bust, there were even SPACs sometimes half billion, 1 billion. So I mean, it was quite popular. It was something that in reality, gave rise to critiques of the Securities and Exchange Commission. And why? Because, for example, there was celebrity interest. So there were many celebrities, like even Serena Williams and so on, and others, that essentially, they started or to sponsor SPACs or to be on the board of SPACs. This why? Because they wanted to lure the attention of public investors and get money. So at that time, the Securities and Exchange Commission issued a warning, and this warning was for public investors: be aware in the case of celebrities in the board of a SPAC, because they don't have financial capabilities, they don't know the market. It's just could be a sort of scam to get your money, and then with that money to find a target that they don't have idea where to find and what to find. So the Securities and Exchange Commission at the time, between 2020 2021, that was the boom of the SPAC, they started to issue a lot of warnings. Warnings, they don't have a legal effect. So that is the point. It's not that then a public investor cannot invest in the SPAC of Serena Williams. They can, but they are warned that if something gets wrong, the regulator in reality was warning them. So that is the idea. The other idea is that if a regulator is going to issue a lot of warnings in the market, then also the market players and also investment bankers and also sponsors of the SPAC and public investors, they feel uncertain, they don't understand what is happening, they don't have a regulatory framework in place, and so they might even decide that from a peak of SPACs they decrease. And that was the idea. The idea of the Security Exchange Commission at that time was to reach again a market equilibrium, because this was not a market equilibrium. There were more SPACs than traditional IPO, essentially. So it is why the Security Exchange Commission started to monitor the market, essentially. Now, speaking about the SPAC of Trump and so on, I mean, as you can see, the value of shares of the target company of Trump started in reality to go up, and up. So in reality, they almost reached then 90 and over 100 per dollar per share. So this is quite typical, because once there is a SPAC that is going into negotiation with the target company, at that moment in time, in reality there is already some news spreading into the market, until the moment that there is a business announcement where there is written that actually Trump startup Truth social media now is public because they were acquired by the SPAC. At that moment in time, the value of the shares, they go very high. So if you are a public investor in the SPAC, that is the moment to sell, essentially. Because usually then those kind of peak is going to decrease. And it is common, I mean, in every SPAC. This is maybe more magnified because it's the SPAC of Trump. But also other SPACs, they did the same effect. They had the same effect. And once there is a business announcement, the value of the securities is soaring, and then it's going to plummet, essentially. It's quite common in every kind of acquisition, mergers. This is something that is not only applicable to SPACs, applies in general in business. But the main point to understand, now that you know this, is to understand that if I am a public investor, I should have financial literacy. So in reality, I should know what is a SPAC and how it works. When I know this, I know when to disinvest and not stay in the SPAC, because otherwise you lose money. That is the idea. I was thinking, if you want, now that we did this introduction, we can have a break, and then we can come back and we can continue, and I show you in more details the things that I was telling you. Okay?
La prima è che ho scritto oggi ad Albinder
Che dice?
per avere aggiornamenti. Non ce l'ha fatto sentire, è passato poco meno di un mese dalla deadline. Mi risponderà, ma è normale oppure...
Sì,
Io gli dà la consegna proprio,
Ah, quello è normale.
perché lui mi ha detto March issue.
Te l'hai mandato?
L'ho mandato prima della deadline, sì.
Ah sì, vabbè, ma lui ne fa tanti di issue. Se può a marzo, lo fa a marzo. Se può
Ah,
aprile.
ok, perché mi aveva
Sì.
detto marzo.
No, quello non c'è problema. Se non è, vuol dire magari non c'è riuscito e ti mette nel...
Ah, vabbè. Invece l'altra cosa riguardo all'esame, che mi è sembrato molto convinto da fare le prime due insieme,
No,
come sconsigliandolo.
no, nel senso le puoi fare ma divise. Non
Perché io pensavo di fare la prima proprio in generale su investor protection e poi switchare anche sul ruolo di financial stability, quindi prendendo esempio Lehman Brothers e poi spostandomi anche un po' su shadow banking, però non vorrei diventare troppo prudenziale.
Sì.
E poi nella seconda proprio ESMA, quali sono i limiti
Ah sì, va bene,
dell'ESMA e
sì,
fare,
shadow banking there perché c'è investor protection, sì. Sì, va bene.
parlare sì, in general investor protection e poi switchare su perché anche perché si possono creare fenomeni simili a bank run tramite semplici issuer, non bank financial intermediaries,
Sì.
però non vorrei andare troppo fuori. No,
No,
ci sta, quindi.
sì, sì. No, fuori no.
Grazie.
You กำลังจะไปแบงค์สิที่นั่นหน่อยอ่ะ
Do the Delaware courts have more of a say in this? Due to the
If there is a
takeover?
SPAC, yes, I mean, if there is a SPAC, yes,
Okay.
because the SPAC is in Delaware.
Okay. Because I'm just confused because in M&A we discussed how Delaware courts have shaped the regulation and the
Mhm.
rules surrounding it, versus here we're talking more about the SEC and how it's more like placed on like a statutory footing.
Reality, I mean, this is in M&A, no?
Yeah.
In M&A, Craig, how it's called, he was just speaking about the UK takeover code and the UK takeover. He was just speaking about that.
Okay.
So you need to focus on UK takeover. He mentioned a bit of US, EU, but a bit, he didn't mention in particular. He mentioned more the fact that in the US there is more, there is not a piece of law, but there are different laws. So that is, only that is what you need to know. And then you need to know in the UK the takeover code, because that has been very good in explaining the takeover code. So, okay, yes. I mean, then reverse takeover now we just need to use it. So,
a lot of stretching and a lot of like.
Yeah, we can do a drink off.
Yeah, to reach no hydrates.
We should go to
And then I was thinking we can even have at the end we can ask maybe that person to take a picture of the class. We can have a picture of the class at the end, essentially. So I think we can start again because then we have a lot of things to see in some way. So until here, any question? All clear? So let's say this was the condition of the SPAC boom in the US. The SPAC, in any case, they born in the US. So they are an American invention, and they were there since 1970s. So I mean, it's not something of 2020. It's a long time ago. At the start, they were not defined as a special purpose acquisition company. So in reality, they were blank check companies. Why they were called blank check companies at the start?
Because when they look out for cash, the company, the target company isn't identified yet. So basically, investing into a shell company that doesn't have any.
Yeah, it's like a check, essentially, that I don't know who is the beneficiary. So the beneficiary will be the target company, but the target company, I don't know this target company. This is also a requirement of the Securities and Exchange Commission. If you have at that time a blank check company, or today a special purpose acquisition company, you do not need to identify a target. So you just need to set up the SPAC, list the SPAC on public market, raise the capital, like 300 million SPAC, 250 million SPAC, 100 million SPAC. Once we have this 100 million, we look for a target, but we look for this in a time frame period of 2 years or 36 months, 24 months, 36 months, and we need to find the target. If we don't find the target, the SPAC is liquidated. We liquidate the SPAC. So And now we will show to you essentially how we can liquidate the SPAC and also how we can return the money to public investor. So that is also the great innovation that if I invest today in the SPAC, I'm not losing money because at some point in time I will return back from this money in any case for two reasons. Maybe the SPAC didn't find the target, so we liquidate the SPAC and we turn back the money to investors. Or other times I don't like the business combination proposed by the directors of the SPAC, and so I refuse to join this idea, and I claim back, I redeem the shares of the SPAC in money. So money are coming back to me at the end of the day. Now, this is the condition we set in the US, but actually in Europe also, in the European Union, we had, during that moment of the SPAC boom, 2020, 2021, we started to have several listings. Here you have in numbers, the majority were in Netherlands, on the Amsterdam Stock Exchange. Why Amsterdam Stock Exchange? Because still today in Europe, the only capital market or exchange where you can replicate all the corporate features of the SPAC in the US style, it is Netherlands. Also because the company law of Netherlands is quite flexible. So being flexible and more in reality close to the interest of public investor and the interest of the sponsor, you can tailor your SPAC deal in Netherlands. You cannot truly do this in France, in Germany, in Italy, because there are some provisions of company law that are very strict. For example, a public company, you cannot always have this feature of redeemable shares. And so in reality this is in contrast to the conception of the SPAC, as I described before. Then, even in comparison, you can see that actually SPAC IPOs, they were higher than traditional IPO. This in Europe on Euronext Amsterdam. So Euronext Amsterdam always saw some SPAC activity, but 2021, 2022 was one of the highest. Of course, 16 SPACs is nothing in comparison to the US. So that is also another point, something that can be even useful for your essay. I think I have uploaded this reading, but in case I can still upload, it is what I define then the political effect of the SPAC. So the SPAC is like a weapon, political weapon. The weapon in this case of Wall Street, because what happened with all these SPACs, essentially once you have 456 SPACs around and they are all Americans, they raised a lot of capital, 162 billion for example. So the main point in the US is that if you have a SPAC that is based and listed in the US, still you can target companies that they are not American companies. They can also be in Europe, they can also be in Asia, in South America. So you can shop around and you can, it happened also, especially during that time in 2020, 2021. In Asia, I don't know if there are anyone from Asia, you should know Grab, the app Grab. That app Grab now is listed in New York, or even in Italy, Milan, Zegna. Zegna is listed in New York through a SPAC. So this kind of shopping around in order to find a target company in other countries and bring that company to your financial market, this is empowering the US essentially. So it is a political weapon. It's not like the atomic bomb, but essentially you have enough capital to shop around without limits. And so you can buy strategic companies, like Grab in Singapore was very strategic company, but now is American company. So in reality, you can target the right company and then make that company American, essentially. So this is something that, for example, this is also why we have a high number of listing here, because here is more free. You can do those things. You can list a SPAC in the US and buy a target company in Europe or in Asia or in South America. You can do in the US. You cannot do in Europe. In Europe, just in Netherlands, you can try to do, but we don't have a lot of examples in Netherlands. For sure, in France, Germany, Sweden, Finland, Italy, and so on, you cannot do. So in reality, the investment banker that is going to list your SPAC on the market will always tell you, don't do it, because we don't support the deal. So in reality, if you have an Italian SPAC, you need an Italian target. If you have a French SPAC, you need a French target. So this is a limit. This limit is because they didn't understand in Europe or in other countries this political effect of the SPAC that actually was already established since a long time ago, but many people they didn't believe in this, and then in reality this is what happened. And here you have the summary, of what we said. So you have the SPAC, Special Purpose Acquisition Company. What they are SPACs? They are publicly listed companies. What they issue? They issue units composed of ordinary share and warrants. In fact, if you see here at the middle, there is the SPAC, and then at the top there are the shareholders, public investors. Every time that the SPAC is on the market is issuing units. The units are financial instruments. These financial instruments are composed by common shares and warrants. Common shares are ordinary shares. So every time that me as a public investor I buy a unit, I become an ordinary shareholder of the SPAC. In addition to this, for free, every time that I buy shares, they give me for free one warrant. So every time that I buy, 2 units, I have also 2 warrants, because they are given for free. What is the difference between ordinary share and warrant? Why the SPAC is issuing a warrant?
There is something to do with the redemption, I think.
Sorry?
There is something to do with the redemption post-acquisition.
Yes, 1 share, 1 warrant. Why? Because essentially the warrant is an hybrid instrument. So the share is ordinary share, I am an ordinary shareholder, and so on. The warrant is a call option. So in reality, the SPAC would like to find a target, and then acquire the target, and the target will become the merged entity listed tomorrow. If I am a shareholder of the SPAC there and I have 1 warrant, through the warrant I have a possibility to buy new shares in this new target, this new listed company. So what happened at this moment in time, that is today, is that the SPAC is issuing units. I buy the units, so I become an ordinary shareholder, and they gave for me for free 1 warrant. The warrant is a call option for the future. So in this way, I might be tempted as a common shareholder to buy more shares in the SPAC because they give me more warrants. And so these are like a bet in the future. The bet that once we will find the target and the target will become public, I have an advantage because I can exercise my warrants, and I can have this right to buy, so not the obligation, the right to buy is a call option, new shares in this listed entity at a lower price, because the price we decide today. Makes sense? So for example, the warrant, what is called the strike price. The strike price of the warrant usually it is $12.5 per share. So what does it mean? It means that once this target company becomes public, and this target company we see as public is going to trade shares on the market. So in this moment in time, it can happen that the shares they trade at 11. I cannot exercise the warrant because the strike price is $12. But at some point in time, maybe they trade at 20. There I eat the strike price because they are above the strike price. So I exercise the warrant, and if I exercise the warrant at the time, it's a big advantage for me because in reality I can buy at 12 something that is worth 20. Now, usually this is why they want warrants, but can also happen. This is the case that I told you now is the case of when once you can exercise the warrant, and so in reality you are in the money because you eat the strike price. Can also happen that you don't eat the strike price. Maybe these shares they always trade at $9, $10 per share, and so you are out of the money. If you are out of the money, to have a warrant is useless, essentially. But here, to have a warrant in the structure here at the start, it's very beneficial for attracting public investors because they have another incentive, and not only becoming a shareholder of the SPAC, but they assign to me for free a warrant. So the more share I buy, the more warrant I have, the more bet I can have in the future, essentially. Make sense? Any question until here? Then the SPAC is taking all this money. This money is maybe 300 million. The 300 million are kept on trust or escrow account. So it is a segregated account. It is used only for the acquisition. So the manager of the SPAC, the sponsor of the SPAC, they cannot touch the escrow and the proceeds of the IPO. They cannot touch them. They can touch them only if they find a target, and then they can use the money, 300 million, to finance the acquisition, essentially. So that is the main idea behind it. But then in time, many things can happen. Can happen that we don't find the target, for example. Or can happen that we find the target, and once we find the target as every company, the board of directors, we go to the shareholders and we say, we found this target. Do you want, are you in favor of this acquisition or not? If they vote no, they can have also the right to redeem the shares. So this right of redemption is good for public investors, but it's bad for the board of management. Because if I could before rely on a trust that was 300 million in value, now maybe it's 200 million. Now I can finance the acquisition. I lose power and capital. So that is the trick. So there is a risk in this kind of mechanism for the board management, but there is a safety mechanism for public investors because they have the right to redeem shares. Make sense? Then, if we don't find the target, we liquidate the SPAC. We said between 24 months, 36 months, we must find the target. If we don't find the target, we need to liquidate the SPAC. The SPAC is liquidated and everything finished. Then, the main point now to understand, now that you have seen more the dynamic, is to understand that here you can see it's written today and tomorrow. Today, from a point of view of public investor, a SPAC is a risk-free investment. It's risk-free. Why? Because the public investor is investing in the SPAC. The money of the public investor are kept on trust or escrow, but then at some point in time, if the public investor wants to redeem, we give back the money. Or if the SPAC is liquidated, we don't find the target, we give back the money to the public investor. So the public investor today has not lost anything, has even earned interest, because usually this money are kept on trust. The trust is invested in short-term investments, and so they are also earning interest. So usually, if you buy the unit of a SPAC, usually conventionally are sold at $10 per share, they will give back to the public investor $10 plus interest, essentially. So it's the same thing to put money in a bank. Sometimes the bank doesn't give you interest. In this case, yes, they give you interest. Yeah.
I have a question. Why would you put it in or have it under management of a trust or under an escrow account? What are the differences? Why you need some?
No, it's the same. Conceptually, it's completely the same. It depends on the country. Maybe in the UK they like trust and they do a trust.
Okay.
Maybe in the US they do more escrow account. But yes, it's the same. The one that you prepare.
Who pays for the management if the shareholders keep the value of their investment? Who's paying for the management of the escrow or the trust?
The sponsor.
Okay.
The sponsor are the founders, members of the SPAC. So the CEO, the directors, the board of management. So the board of management, in fact, this is the other part of the story to finish. But essentially, once you set up the SPAC is set up by the sponsor. The sponsor usually are billionaires, millionaires, or sometimes even people in finance. There can be many, but usually they must be very well known. Why? Because the SPAC is a casual company. They don't have balance sheet. A public investor, the only thing that can evaluate on the paper is the quality of the sponsor. Who are the sponsors? Are good managers, big managers? I mean, this is what can in reality give trust to the investment. So for example, the sponsor has never sponsored the SPAC before. This can be a red signal. I mean, you need to bet on the capability of that man. But it's also true that that man maybe is very famous in the fashion industry, and we want to target only companies in the fashion industry. So this is a good skill. So I might bet on that skill, because although maybe he didn't sponsor before SPACs, but he knows what we are speaking about. He will know what kind of target company to buy in the fashion industry. Makes sense? So the sponsor is the one that is putting in reality what is called at-risk capital. Why at-risk? Because in reality they are putting capital on to sponsor the SPAC, and usually to sponsor and to buy, I mean to pay for the services of investment banker, accountants, lawyers. I mean, there are a lot of expenses. Let's say that at least 4 or 5 millions you need to spend. Because there is this kind of cost on the side of the sponsor at the start, the sponsor has a right of, you see, it's written promote. What is the promote? The promote are founders' shares. This is my SPAC. I set up the SPAC. I have the right to buy, to be assigned founders' shares. So it means that are shares that are not allocated to public investors. They are allocated only to me. But I buy those shares at 0.0000052 cents of dollar per share. So in reality, almost for free. The only fact and criticality is that now is less aggressive. In the past, the promoter was 25% of shares. 25 is quite high. And so, once then this target company was found and then was listed, the public investors, they were diluted by the shareholder of the target, the sponsor promoter, that was the equivalent in proportion of 25% of those shares, and then the shareholders, public investor that they stayed in the SPAC, but they were diluted in the shareholding capital, so they were always the one losing money in some way. Makes sense? So that is the big part, and the big part is that some millions are put in these warrants. So even the sponsor is assigned some warrants, they pay quite a lot, that is at risk capital. Can also happen, they need to liquidate the SPAC, they lose, they sustain a cost. So once you will read even in the readings that there were many criticalities that the SPAC maybe took advantage of retail investors. This is quite true in the US, because in the US a retail investor can invest in the SPAC. In Europe, other countries, no. So this is more an American story. But it's also true that the retail investor that is going to invest 1 million only on that specific SPAC doesn't know even diversification of portfolio theory. So in reality, it's not the duty of financial markets to make you rich. You need to understand the market. So in reality, if you are crazy, if you want to put all your savings in one SPAC, at the end of the day, the risk is very high. Can be also very good, because of course, if then there is a good acquisition of a target company that is going well in the market tomorrow, yes, your shares then will appreciate in value, but this is not a guarantee. So in reality, that is the main point. As you can see, is how the SPAC works. I mean, there are, in this kind of mechanism, some things that are pro-investor, some things are pro-sponsor, but at the end of the day, I mean, everyone knows how to enter in the market and how to exit. For example, if you are a public shareholder, you can wait today because it's risk-free investment, but you know that once we find a target and then you stay in the deal and you continue with the SPAC and in the post-business combination, you know that then there is business risk. So in reality, everything can happen. Can happen also that the shares of the target company that now is the new listed company collapse. But this is not the fault of the SPAC. That is the main point. Of course, one point that I agree with is that if you are the SPAC sponsor and you want to be aggressive and you want to buy a target company that is a startup, and you are maybe convincing public shareholders today to sustain your deal, because in any case you make sure that this target company tomorrow will produce X number of electric vehicles, there you have misled public investors, because you already knew that the target company could not do this. So you wanted just to close the deal for your interest, because you were the sponsor, and then maybe after 1 year you sold out your shares and you exit, and you leave all this public investor in something that doesn't have a future. So the line is very thin. Every case should be examined on a case-by-case basis, essentially. But we cannot generalize saying all the SPACs are bad. Some are good, some are bad, as every investment, essentially. They don't even look all the same today, especially in the new SPAC renaissance, that is the one of 2025, 2026. They don't do anymore this. They always find targets that are more consistent, that they are less about startups. They also do enact or publish more disclosure in relation to investor. So that is something that changed after the SPAC boom and dust. It changed in the market. Any question on this kind of mechanism? Because basically the point at the end is this: if you understood the transaction, this is how is the transaction, the structure in corporate law, you understand also the regulation of securities. So in reality here we know that we have a simplified IPO, because the SPAC does not have balance sheet, so we don't need to verify balance sheets. There's nothing there to verify. We need to verify the quality of the sponsor. We need not even to set a price for the unit that the SPAC is selling, because usually conventional is $10 per share in the US, €10 per share in Europe, £10 per share in UK. So we don't need this. At the end of all this process, essentially, one point that for sure we understand from an investor protection point of view is the trust, the escrow, because that is investor protection. So in reality, if all the money, the proceeds are kept in escrow, they are secured from mismanagement of the SPAC board. So in this way, investors are protected, because if they want to redeem, and this is another feature in securities laws of the SPAC, the right of redemption, the right of the public investor to redeem shares and so come back with money at the moment of the business combination. Makes sense? So in reality, securities laws is copying and pasting, in reality, the structure of the SPAC. Now, this kind of idea born in the US, before there were blank check companies, they were listed in penny stock markets. The penny stock markets, they were those of the Wolf of Wall Street. But then, after that moment, yeah, I like that you smile. But in reality, yes, they were doing some dodgy stuff, of course. In the penny stock market was more dominated by fraud. So they had an idea. There was a CEO that had an idea to change the name from blockchain companies to special purpose acquisition company, and to, in reality, create the structure that I explained. So the structure that I explained was invented by CEOs, was not invented by the securities regulator, essentially. And then once the structure was in place, the securities regulator, they started to issue new rules. So for example, the listing rules of NASDAQ, listing rules of New York Stock Exchange, they essentially, they cover those points, like the protection of investors with the right of redemption, the protection of investor with the trust, escrow account, and then the moment of liquidation of the SPAC, so the procedures of liquidation, for example, and then the regulation of securities, what type of securities the SPAC is offering to the market, units, and so on. So all these things then, they were inserted in what we define today listing requirements of the exchange. So the exchange itself is issuing that, essentially. Then you will see in other jurisdictions, like in Italy, we don't have proper listing requirements, just some listing requirements for SPACs. In other jurisdictions, like, I don't know, Singapore, Hong Kong, during the SPAC boom, they truly designed specific listing requirements for SPACs. But they designed that not completely aligned to the US. So the same in the UK, there was a SPAC reform, but is not aligned to the US, in the sense that in terms of protection, yes, protection of public investor, yes, there is always the trust, the escrow account, there is always the right to redeem shares, but in other terms, no. So for example, the sponsor doesn't have the right to vote in the business combination that is proposed by the sponsor in the UK. The sponsor does not have the right to vote in the UK. In the US, yes. So this is not very competitive with US, essentially. It's a problem because, of course, if you are a sponsor, if you need to invest 5 million of your money, where you want to list, in the US or in the UK? In the UK, imagine I put 5 million on the table, and then I find the target, and I cannot even vote on what I find and what I put on the, money on the table. So in fact, today is zero listing in the UK. It's normal. So essentially, to be competitive is also this, is to give, not even advantages, to give what is right. If the sponsor has money, who has the money has the right to vote. then we can discuss about the promote. The promote may be in the American waste to extreme is quite big, 25%. But maybe, I don't know, something that is even 15, 20% is fair. Because at the end of the day, the sponsor is doing a lot of job. So it's not only taking the money of public investor, the money is not the money of the sponsor that are put on trust. The sponsor is going to find a target, and that is not simple. It's a very difficult job. And even to go in meetings and then to find the right target, to design the right business combination, it's a lot of job for free. Another point is also this is for free, because the sponsor is not paid during the 2 or 3 years. No one is paying the sponsor. So the money of public investors are not used to pay the sponsor. And that is also to increase, in reality, the reliability, the trust between public investor and sponsor. So that you can see that you trust me, you gave this money, but this money are kept on trust, I work for you, and then I should have a benefit, because otherwise why I'm working for you? If I find the target, should be right that I have the right to 20%, because in reality behind the scenes I did a lot of job for free for 3 years. So there are also these kind of things to mention that then in the newspaper they don't mention, but this is reality essentially. Any question until now? So this were the time of the SPAC boom, the second coming of the IPO, because actually at that moment in time, that was 2021, there was this kind of dilemma. Is the SPAC the new IPO, or it is an alternative acquisition model to get listed, for example? At the time, I was more on the idea that in 2021 was the second coming of the IPO, so it was a new IPO. This idea then has been confirmed by IOSCO and by the reform in 2023 of the US Security Exchange Commission, because they said that in reality is a second coming of the IPO, and even the IOSCO at the end is written, not second coming, is, I mean, it's a journalist jargon, so they don't say in this way, but they say that they are going to transform the IPO in a way that they can also substitute in the future the IPO, because there are some criticalities in the IPO. While this SPAC model is better, although took time to build. So for example, the SPAC of today are much better than 2020 and 2021, because they learned from mistakes and now they are more fair. There is more market integrity. With the SPAC reform in the US, the main difference is that today this target company needs to issue a new prospectus. At the time of 2020, 2021, no, in reality you find the target and then the target directly becomes listed with very simple verifications. Today, no, in the US, the target company, then once you find and you merge, you need another prospectus, as if it is an IPO. So that is why reality SPACs that before were a little bit different from IPO, today they are very similar to an IPO. So they become a legit way to list companies. But you list companies through this kind of transaction, M&A, essentially. Something where actually the parties, that is the SPAC and the target, that decide the price also. It's an M&A activity. In the case of the IPO, it's the investment banker that decide the price of the shares. So it's very different. This is why it's gaining more momentum, essentially. If this system is fair and there is more market integrity, transparency, and so on, the system is better than IPO, essentially. And here you have an example of how essentially a SPAC is going to make an acquisition. I mean, this is the example of Diamond Eagle and this was the target company was called DraftKings, and actually is the company of sport betting in the US. They became public through a SPAC. So I think there was a question. There was a question that said, asked me about reverse takeover. So in reality, the reverse takeover is when there is a company that is already listed on the market, the SPAC. In fact, I don't know, have you ever heard about RTO, reverse takeover, that is done in London? In London, it's done in a similar way, not with a SPAC, but you list a casual vehicle, and then you take over a private company and you make it public, essentially. So for this is the reverse, because it's the SPAC that is eating the target, and the target is becoming public, essentially. So reverse takeover is this. If we are in the UK, this will be under the UK takeover code. There was a question of someone, now I don't remember. But essentially, yes, the UK takeover code will be inside. Is there any question on this? I mean, on the idea of the SPAC, the transaction, the moment of all good? So this one I put in the slide, but I will not in reality deal with all of this, because actually we need to see more about securities in some way. But it is more to give you a full set of slides where in reality, if you want, you can even have a look for curiosity about the SPAC business combination. But the SPAC business combination, as I told you, is M&A activity, mergers and acquisition. So as you can see, there is preparatory work, due diligence with data room. So the SPAC is carrying out the due diligence of the target company, but also the target company should carry out the due diligence of the SPAC, because you don't know who are those managers, and it's always better that due diligence in this way is dual process in SPAC. It's not a traditional M&A where there is the buyer and the seller. In this case, you need both parties to carry out the due diligence, because at the end of the day, the target company will become public on public markets. And so this is risky, in the sense that then if there is something that, I don't know, even a tiny investor can claim that was misled in the process, if you were carrying out a good due diligence, this can save you. Can save the SPAC managers if you are the SPAC carrying out the due diligence on the target, but can save also the target itself, essentially. Then in terms of PIPE investment, for example, the private investment in public equity, why this is important, and I show you with this that is simpler. We said that essentially, sometimes the SPAC does not have enough money to finance the target. Why? Why sometimes the SPAC doesn't have enough money?
There were no enough investors in the IPO.
There were not?
Enough investors in the IPO.
Yes, essentially, no, there were enough investors. So for example, if I am a SPAC and there is money for 300 million, I find the 300 million. Yes.
You raised your
I
capital.
raised, yes. I raised 300 million. I put the 300 million on escrow, so separated in order to be protected for investors. Then we arrive to find a target, and we call a shareholders meeting. Some of those shareholders, they want to redeem shares. And so it means that if I have 300 million today, tomorrow with this redemption I have maybe 250, or maybe I have 200 million. So that is the point. There are moments where in reality the money kept on trust or in escrow are not sufficient to finance the acquisition of the target. So what you can do? In that case, what you do? What can be an idea?
Maybe these sponsors can call other banks, or the sponsor
Yeah.
can send more money.
Exactly. For example, if I am very rich as a sponsor and I want just to close, I say, okay, we are less 100 million, now this is 100 million. You can put from your pocket. This is one idea. Another idea? You said, what was the other? You said another one. You said another one.
To call other banks.
Exactly, to call banks. For example, you can ask for a loan. Another one?
Get a loan.
Yeah, get a loan, yes. In fact, if you get a loan, it becomes like a leverage buyout, yes. In fact, it is good. I mean, SPACs are a specification of private equity, but they are financed by equity, not debt. So usually it's not very common to ask the loan, but potentially you can ask a loan. Then there is the PIPE, the private investment in public equity, PIPE. Like this. So the PIPE is American, always invention and so on. Everything is American, essentially. The SPAC is American, PIPE is American. Here is not very common, Europe also, not so much. But in the US it's very common. So what you do is this, as the SPAC sponsor, you call your friends that can be hedge fund managers or mutual fund managers. At that moment, you offer them some shares and they offer you money. So in reality, because there were redemption, so now there are less shares and more outstanding shares, you assign the outstanding shares to the hedge fund manager or whoever through this PIPE investment. And the fact is that, of course, the hedge fund manager is buying those shares at low cost, I mean, low price. But on the other end, is financing your deal. So in this way, you are able to close the deal, and usually the hedge fund is making good money. Because they don't finance a deal that, I mean, they will not go well. They usually go in deals that they go well. And then what they can do, if they really, and something that they did in the past, maybe they buy shares of the target, but then once there is the moment of the business combination, these shares, they go up and they sell later. So they do a sort of speculation. So they are earning quite a lot with this, because they buy very low price with the PIPE and then they resell very high.
Maybe at the moment of the PIPE, they already know who the target is.
Yes, they already know.
That's the problem.
They also already know who the target is, yes. So PIPE, it is something useful for SPACs in a business combination. The point is that PIPE, from a securities regulation point of view, is not regulated in Europe. I mean, there are not many rules concerning this type of investment. So what really changes that, I mean, in Europe, that are European financial markets, UK financial markets, we don't have a very strong regulation of SPACs. We have just a few listing requirements based on the model of the US. But then there are so many things in this SPAC transaction, including PIPE investments, that they are not truly regulated in Europe, or we don't even use them. And so that is why then more SPACs today are listed in the US and they are not listed in Europe or the UK. This is also an additional point, because if I am a sponsor and I need money at some point because I need to buy the target, but I don't have enough money in escrow, if I am in the US I can obtain a PIPE. If I am in Europe, it depends. It's not so common. So I need to make sure that even the investment bank that is going to list the SPAC usually is making sure that you are very solid sponsor, because they know if this is happening, you will put this money on the table, usually, in Europe. In the US also they did. Some sponsors they did. So it's up to the sponsor, essentially. But usually, I mean, the sponsor, they are not very happy to put 100 million on. They might even do, but it's not something that they are so happy. And then it's usually huge amount, it's 100 million at least. And 100 million, for this you go to PIPE. You need to go to qualified investors. Not all the sponsors, they have this quantity of money. These are just billionaires, essentially, that they can do this of 100 million. Then, yeah, this is fine. This you will find, I mean, different things related to M&A, but it's not really the key point here. I mean, in reality, we need to see more things related to securities, but maybe a negotiating point. I mean, negotiations are key in the sense that usually the SPAC board is the one that is going to the target company that is private, claiming we are the public company, we have those money. So in reality, all the discussion sometimes in this kind of tables is that the target company needs to convince the SPAC, not the SPAC needs to convince the target company. The target company already has to be sure to get listed and be ready to get listed. If this is the case, then everything else can happen, essentially. Preparatory work. These are all the classic list of key documents in a business combination. SPAC business combination is the same. The letter of intent. The letter of intent also is quite interesting in the sense that it can be connected to what we were saying before, that the SPAC has a certain duration of time, so like 24 months, 36 months. If, for example, I find a target company close to the end of the termination period, but I can show to my shareholders that I already signed a letter of intent, I can ask also an extension of duration of the SPAC. But I should have a basis, I should have a letter of intent. So letter of intent are quite key in SPACs, because can save a board from liquidating the SPAC. If you have a letter of intent, you can save this possibility. Then everything can happen. You can also provide a letter of intent that is fake, but this is a fraud. But of course it's going to give you some time not to liquidate. If you liquidate, you have lost all the money, if you are the sponsor. If you are the public investor, no, essentially. So, what do you think is best, financial regulation or self-regulation? In terms of SPACs, now that you have an idea, I mean, more or less, now you understand what is the SPAC, how they carry out the business combination. Should we regulate SPACs, or should we leave them within self-regulation? So it's very securities law question.
A mixture of both might be. Right now they're not regulated and they're working correctly. Right?
Right now, SPACs are exactly are regulated or unregulated.
So
There are some regulations in the UK takeover code.
Yes, there are, I mean, in the UK there are some rules now. Let's say, in all the world today, they are more regulated. So we had a SPAC reform in the US, so really with the law. So they modified the Securities Act and the Securities and Exchange Act. So after more than 100 years, the SPAC could modify fundamental securities laws in the US. So they have been regulated. This is the main point. At the end of the day, they have been regulated, but they born from self-regulation. So the initial point of a SPAC was from self-regulation, not from financial regulation. So already here, you can show you the things that we said since the beginning. That regulators are always in delay. Something is happening, like the SPAC boom and bust, financial regulation. But before, no. Before they were just simple listing requirements that they were recognizing the market practices of the blank check companies that then they became in the 90s the special purpose acquisition companies, but actually they were dominated by self-regulation. It was a CEO that invented the slide that I showed you. So the fact that the money of public investors, they must be kept on trust, the fact that the public investor has the right to redeem shares. So all these things is through market practices, self-regulation. Then became financial regulation. So financial regulation today is going to incorporate those market practices, giving a standardization of market practices, essentially. But everything born from self-regulation. So that is also something more deep that in your essay can go, because in reality you can see through the example of the SPAC that probably financial innovation has always been a product of the market, and they were always been self-regulated. And then something happened in a negative way, a market event or a crisis, and then we have financial regulation. So this is quite interesting from a critical perspective, essentially, because we have always the fact like that self-regulation born before financial regulation. Something that we discovered with SPACs, but you can see also this with private equity. Private equity then became more regulated later on, but at the start was self-regulated and also born as a kind of transaction, as a kind of common standard that the market industry was following in the 90s to finance deals and to buy out companies. So first self-regulation and then financial regulation, essentially. Yeah, that I was one day in the Securities and Exchange Commission of Malaysia, because I was doing a training, and I put this picture of the Wolf of Wall Street. But then I didn't realize that essentially being being an Islamic country, in reality this created a big problem. But luckily I was not in the country, I was, I think, I don't know, in some countries you can be arrested, but I could not think that this is, I was thinking it was from the movie, essentially. But I still remember, for this now I put every time. So, UK SPAC reform in Europe. So here you have just the summary of what we said, essentially, how was the system in the UK. So in the UK, essentially, before the SPAC reform, that the SPAC reform is 2021, since the Hill report. So before 2021, the understanding was that if you have a SPAC listed on the market, at the moment in time that you find the target, you need to notify the Financial Conduct Authority, but you need to suspend the trading of the shares. So this was the idea. And is still applicable today. Is still applicable today for SPACs below 100 million capital raised. This was an idea of the Financial Conduct Authority. They wanted to have in the UK two kinds of SPACs. The SPACs below 100 million and the SPACs above 100 million pounds. If you are above 100 million, we don't apply to you the suspension of trade of shares at the moment of the business combination. We facilitate the process. If you are below 100 million, no. We will verify in depth. So in reality, no one will do something below 100 million in the UK. Has been done on purpose in order to, they were thinking at the time, to attract more investors, big money for the UK. But actually then they committed some mistakes, because this was not a big mistake, could even be an idea, strategic idea to attract more capital in the country. The problem is that, as I told you before, if I am a sponsor of the SPAC in this new reform, I don't have the right to vote. And this is not competitive. In New York I can, in Europe I can, in Amsterdam I can, in Singapore I can. So why I should go in the UK? To penalize myself. In fact, no one is going, essentially.
Sorry, Daniel, but what was the strategy to attract?
Now the strategy was this, that essentially if I put a minimum capital, so for example, if I say every sponsor that would like to sponsor a SPAC in the UK, if you sponsor a SPAC of a minimum 100 million or above, I give you some benefit. For example, you find the target, I don't suspend the trade of your shares, you don't need to notify the Financial Conduct Authority, I simplify your procedure, your life. But if you list a SPAC in the UK below 100 million capital, you have the old rule of suspension of trading of shares. That this can destabilize the market. I mean, it's something that is not good. Does not make sense even in a SPAC business combination. So it's been strategic in the sense that they say we want only big SPACs, big money. We don't want something below 100 million. Actually, the original amount that they put was 200 million. But then me and others, many others, they wrote to the Financial Conduct Authority, and then they put 100 million. But still is quite high, or in general, does not make any sense, because this can even be a strategy to attract investors that are more prominent investors, a sponsor. But on the other hand, then you deprive maybe the sponsor to vote, and that is against the common rules of the US, or the common international standards of securities regulation of SPACs. There is no any international standards that is telling you that depending on the value of capital that you raise, you have one benefit or the other. This is just a UK English way that actually was not successful, essentially. Then, in fact, something better was done by Europe. Europe with the European Securities and Markets Authority, that now you know, ESMA. They published a public statement on SPACs, the first one in history, on 15 July 2021. So in that public statement, first of all, it's soft law. It's not compulsory. It's just a soft law instrument through which then all the member states of Europe, they try to go in line. But very generic instrument. I mean, if you go in this public statement, you see the definition of the SPAC, the encouragement for all the financial markets in Europe to adopt listing requirements that they can give the right of redemption, the fact that the SPAC has to set up a trust or escrow account where to keep safe the proceeds of the IPO. So, standard procedure of every SPAC in the US model, essentially. And in fact, many other exchanges in Europe, they follow the public statement. But in this public statement, there is nothing about the English way. They don't put strange things. They just copy and paste the model of the US. Then there is a debate, I mean, in Europe, whether SPACs, they might be a mutual fund or a sort of hedge fund. In reality, they are not anything about this. So UCITS rules, alternative investment rules, they don't apply to SPACs, because actually they are cash shell companies. and they are not operating companies, and they don't keep the money of public investors forever. They keep for a limited period of time for a specific purpose, that is the target company acquisition. So for this reason, in the paper that I uploaded, that I wrote in Cambridge, you will find out the reasons, why this cannot be possible. Then Euronext, yes, in Europe, the biggest market or pan-European market is Euronext, with Milan, Amsterdam and Paris. So this is another point where SPACs, they will be listed. And then Frankfurt Stock Exchange in Germany. In Frankfurt Stock Exchange, under German company law, you find many issues to list a SPAC, or to have the same mechanism like in the US, the right to redeem. This is something that is not common in Germany. So sometimes what happened, that German sponsors, they set up the vehicle under the company law of Luxembourg, and then they list in Germany. In this way, you still have a SPAC that is quite flexible, because it is it is incorporated in Luxembourg. Luxembourg, you have a right of redemption. You have more possibilities, yes. And here in Amsterdam, I told you already, one of the best for SPACs, because you can in reality have this model, US model. You can replicate the same features as if you list in the US in Amsterdam. So Amsterdam Stock Exchange, Euronext, and here you find even some data why for SPAC IPOs is one of the best venues. For example, even now, here there was a client that wanted to list a SPAC in UK, but immediately maybe an investment banker in Amsterdam was telling you the same things, why Amsterdam is better. Among those things are this kind of anti-competitive issues that the SPAC reform in the UK has, something that you don't find in Amsterdam. And then Amsterdam also permits private limited liability companies, BV, which guarantee lower voting threshold to approve the combination, the business combination. Mandatory offer rules do not apply. So there are some advantages also within the Dutch company law. And so that is why actually every time that you see SPACs in Europe, you should see the listing requirements, but especially also the company law framework, because we are many member states and each one has different company law measures and provisions. For example, recently there was a reform in Spain. In Spain they did a reform in company law for SPACs. So they understood what I was writing maybe in 2015-16, that essentially company law matters in Europe. In general, also in the US, but the problem is that the fact is that the US and the UK, they are common law countries, so in reality they are more flexible. But civil law jurisdictions, like even Brazil, is there that you need to look at the company law. So essentially whether your company law framework can allow, first of all, a SPAC to work as in the US model. Because maybe you cannot even set up a trust, or you cannot even set up an escrow account, or maybe you cannot have an escrow account for a specific purpose, that is the business combination. This is a problem in the law. And so if this is a problem in your law, in your country, you cannot set up a SPAC in any case, even though you have a listing requirement that is telling you good things how to list a SPAC. This does not apply, because at the end of the day, the SPAC is a company. So one way that you can do is always to list the vehicle, to incorporate the vehicle in another country more flexible, and then list in your country. This you can do, essentially. And you can bypass the problem. But it's more difficult. Sometimes it's better if you have money to go to the US directly. because in this way you're already on New York Stock Exchange, and you incorporate the SPAC in Delaware. Now, another point also to tell you about company law is very important, because even if we think about the US in this moment, many SPACs that are listed today, they are not incorporated anymore in Delaware, they are in Cayman. So in the SPAC boom, 2020, 2021, many of those SPACs, they were incorporated in Cayman because they were targeting European companies, Asian companies, non-US companies. So if you are incorporated in Cayman, you are a foreign investor in New York. So in reality, you can bypass some taxes. So it's better for a tax purpose. Now, this was the original rationale. The rationale of today, why all these SPACs are in Cayman, is not because they want only to list or to target European company, Asian company. It's also because they want, what's called, yes, it's not for this. I told you the taxes. Yes. Yeah, because it's very hot and at some point.
It's very flexible, okay.
No, very flexible, yes, but there was one point very important.
Fiscal paradise.
No, the fiscal paradise, yes, because it's Cayman, but this was the original rationale. This was the original rationale, taxes. But then in 2025, 2026, this is no more the only rationale. It's not, yes, because Delaware, there was a lot of litigation. So because there was a lot of litigation between 2020 2021, now many SPACs, they prefer to get incorporated in Cayman, so that if then there is a litigation in the future, they don't dispute in Delaware. There was a lot of litigation, and some of this litigation went against the SPAC. So that is the reason why. So every time, and this is, I mean, in general also in securities laws, that you find a different kind of office that maybe is based in Cayman or is based in Delaware, is not only for taxes, can also be based on securities litigation. So where you find that securities litigation jurisprudence is against you, you don't list, you don't incorporate the company there. So Delaware lost a lot of money, essentially. Yeah, then there, I mean, you can even say in the say or whatever, I mean, those kind of things. And here you have comparing tables, essentially. So between the AIM listing, standard listing, Aquis market, this is the London Stock Exchange, and then the Aquis market, I mean, is very small market. So it is also true, we should say that in reality, I mean, there is a possibility now to list a sort of SPAC on the Aquis market for medium-sized companies, small companies, but has not been used a lot. For example, the board of directors in the past, they consulted me on this kind of rules of market listing, but then were never used. So, I mean, so in reality, they are not very used in London. And the Aquis market in reality is not under the London Stock Exchange. So I mean, there are different ideas there. You don't need to know all these kind of listing requirements in London. These are just to let you understand that every exchange will have different listing requirements, essentially. And then it's important also to look at the company law every time. If the company law can allow that kind of features of redemption or whatever that you find. Any question? I mean, from a security point of view and from a transactional point of view, we have covered what we needed to do. Because also from the say in the essay you will speak about the US, the UK, and Europe, essentially. So you speak about those by explaining also what is the SPAC, and I explain to you. So you can draw, you can even copy and paste the picture. This you can do. It's not, it's okay. You can also mention the slides, and then you should read the essential reading, the one paper that I wrote in Cambridge. There you find the reality paper. If you read that, you find the answer to the essay question, essentially. You just need to reframe, put in a different way, but yes. Any question? Or in general also, because I mean, I think there will be tutorials next week, so that, yes, will be me and Douglas. So we will come back with Douglas also. If you have any question about, I don't know, essay questions and so on, we can come back in any case. So maybe have a look during these days to the essay question, because then it's me and Douglas, and we can tell you, for example, Douglas for his part, me for my part, or even together. We can discuss that even more in depth. Now, if you have time, because I think we have a little bit of time, make sure, first of all, the student survey, that should be done. So in reality, if you have not done so, try to fill in as much as possible in these days. So to evaluate the module, this module, we need many answers. We need answers because we have few for now. So we need more than this. And then if you want, we can do a group photo, but then we need to call someone, essentially. So I just go outside. Maybe we can put like all of you together there, if you want. So you can start to place yourself. I just call someone.
I don't want to do it outside. You guys used to do it outside. Yeah.
So we do abroad.
Give me 1 minute. I'm coming back.
Okay.
Which model?
15 Pro Max.
16.
Should have a better
Mine is the worst. It's like a stone.
thing is that I think it might be easier to get it when people don't want to see it. Yeah, that's good.
time. Put the timer. Why you're not taking it? You should take it as well.
Yes, but yes.
Do the
Picture,
timer.
guys. Attention, please. Big smile. Like this is your favorite lecture.
Okay, it's coming, it's coming.
You can stand here, I think, or
Okay.
maybe here.
Yeah.
Aren't you gonna be in the picture?
There.
Okay.
Thank you very much.
Yeah. Ready? I've taken multiple.
Perfect.
Congratulations, guys. Thank you. I wish you good luck.
Sorry, can I see it?
Yeah, more or less.
It is, but I think
Yeah. We'll send.
nice.
Thank you. Yeah.
Today's class was actually really
Sorry?
good. Today's class,
Ah.
second hour was really good.
Thank you. Thank you.
I just have one question about referencing.
Yeah.
For example, if I want to reference a slide on a PowerPoint, how can I do that?
Yes. For example, PowerPoint.
Yes.
So.
Okay, PowerPoint, like week one maybe, or
It's a reference.
yes.
You see, I write.
Yes.
I write,
Okay. Okay.
And then I put the reference number one.
For example,
comes
yes.
to that. And here I put this is PowerPoint.
And slide.
This is PowerPoint number 3. Slide number 4.
Okay.
Maybe here I think we can put the title of the PowerPoint.
Okay. Perfect. Okay.
So there is not a way to cite PowerPoint. So you can cite as you want.
Okay.
As far as you put the author, the name of the PowerPoint of the weeks, the slide.
Okay. Perfect. Thank you.
chaud. Ouais, ça
J'étais là en mode waouh. J'ai même pas, je suis rentrée hier, je l'ai même pas pris.
Oh,
Est-ce que c'est
comme
comme
ça, je me connais pas.
Par contre, j'avoue, c'est risqué. Ouais, mais je reste debout. Je peux pas demain en Suisse.
Demain, il fait 25.
Comment t'es J'étais là en mode un manteau, je pense que c'est pas dégueu. J'ai pris un pull, j'étais en mode ça sera. Yes. Là, puis j'abuse. Ah oui, ok. Bah, c'est vraiment, tu traverses le grand truc et ça. J'étais où J'avais des sauces l'après-midi, j'étais trop fatiguée. Tu vas demain au.
Ouais, je pense.
Ouais, de toute façon, Cassandre m'a dit qu'elle avait lu un truc plutôt